You're looking at a chart of gold, and I want to talk about this entry that I've just taken on gold. Let me just get this out of the way. Don't need that on the screen. Now, I spoke about this 4-hour rejection block earlier today. Okay, that's this wick here. This is the 4-hour candle. So go and watch the video I posted earlier. It was the previous video to this one. Okay, that's the wick there. And I said, look, we've got to watch the midpoint of that 4-hour wick. And now we've come back into it, and we are respecting that. Now, you can further qualify that because the 4-hour candle has still a couple of hours to close. And so you need to add some confluence there, okay? Number one, that's at that 2391 level. Okay, I've already mentioned why that's important. We can draw a line from this level. Go back and look at the previous video, why I'm saying this level is important. So our bodies are above that as well, okay? On a 1-hour chart, we can see that there is a balanced price range, okay, where we have a single down candle and a single up candle. That price is now balanced, okay? So we've come in and the bodies are respecting that open fair value gap, okay? So a few confluences there. We also have a gap on the 15-minute chart, okay, right there. But this is probably more balanced on a 45-minute chart. You can see we've come right into that gap, okay? The bodies are now above. So there's lots of confluences on the entry. And then the key also is that, you know, the 15 minutes is respecting that midpoint of that 4-hourly rejection block that we've marked out. We've also got a balanced price range up here on a 15-minute chart coming to this gap, okay? And then on a 1 minute, you can see strength as well. So you can see we've come down into the midpoint of that 4-hourly rejection block consolidation, okay? You know, we've got these 3 down candles. That's the order block. We've traded above. That now validates that as an order block. You have a shift in the sentiment, right? This is the change in the state of delivery. And then we come back down into the order block and then we take off. We're above these down candles that created this down movement, okay? And so order flow, in my view, has now shifted. Timing is also important. All this is happening in London, right? London over that 1 a.m. This is that second hour. So this is 2 a.m. Look at when this order block is formed. Remember I said, look at the second hour and 30 minutes into that second hour. So at that time, these 3 down candles take out this liquidity. Okay, we go above and then we come back down in. So that's the order block on A. This is a 1 minute chart. Okay, so remember I said sometimes when I identify high time frame levels and I add all these confluences that I've spoken about in this video, I often go down to a 1 minute chart to refine the entry at the right time. So right at 2:30, right, second hour of London, 30 minutes in, we've got the order block, validation of the order block, move back down to the order block, and then displacement. Okay, and it's a 15-minute chart that I typically look at. We've also got order block down into that midpoint, into this gap, into these order blocks here. Okay, and then we're trading above. So my target on this trade is the high of Asia up at 2403. We're 2403. So this is a high of Asia. Okay, it's a 5 lot, and I may even, depending on what I see, I may keep the trade on to take out this liquidity and this liquidity. Okay, I do believe we will get up to 2412. Okay, I also said in the earlier video today to watch this level. That will also be a target for today. Okay, so this move up here, this is liquidity. Everyone's short. Okay, everyone's short here from the high of Asia, and this move up will take that liquidity. Okay, and this is why I'm thinking a hold up until 2412, because this move up will use that as liquidity and this as liquidity. This is the previous day gap time between, well, that's actually the New York high. Okay, well, you could say that's a London high because New York opened at 7, but I'll just call that the New York high. Okay, so initial targets are going to be above this. I like liquidity just under a high that I'm targeting. So my target right now is high of Asia. I mean, that there is plenty of pips. Okay, that there is over 100 pips. So I've already entered down here, up there. So that's 130 pips. I don't have to wait. So that'll be my target above Asia. Then I'll decide whether I want to keep. You know, we might push through. It might not be a move up to here. I might push through and go through this high and this high as a result of this move. Let's see how this pans out. I wanted to just do a live video on the entry so you can see the rationale behind the entry. Really the key for the entry, the 4-hour rejection block that I spoke about this morning. Okay, London has come into that. Look at those equal highs. I also spoke about that earlier today, 2411. Now, this is that rejection block we've come into. Okay, look at the midpoint. It's still respected. And then you've got to add some confluences. We already know this is the key level, right? This 2391. This I've already spoke about. Stop hunt, closing this gap into these order blocks. 1 hour chart gives us a balanced price range. That was really the premise of the entry into this gap, which is closed. Bodies are respecting that. Obviously, the 1 hour is still yet to close. We've only got a couple of minutes left for the 1 hour candle to close. We can see the bodies are respecting that gap. I'll turn off this so you can see that. Okay, there's the gap. Balanced price range. Entry is there inside of that gap. Okay, that's where I've entered at what time? 2:30. Okay, as we have come in to that lower time frame. Okay, so we'll monitor this. Now, this is still trapped by these up candles, right? I mentioned that in the morning that this hourly bearish order block could push price down. So long as we don't take out these lows, I'm bullish. I'm expecting this not to make a new low and continue higher to take out these highs. Okay, so that's what I'm looking at. Obviously, if this continues and makes a new low, then I'm out. Okay, but I'm expecting this to be the low that's in. This is typical expected price reaction from this high, to up candles to be the bearish order block. where the market's enticing people to go short, okay? But I want to see price hold at this level and move up, okay? So hope that video was useful. I'll post an update video on this entry later on, but you can also monitor it live, okay?